I jolted awake, checked the chart and thought, did Bitcoin really nosedive 4 grand while I was making coffee? You ever feel the ground shifts under your feet and then you realize it's just the crypto market pulling one of its 4 a.m. pranks? Yeah, well, today's one of those mornings, right? And I want you right here on the front seat of this roller coaster with me, because what's happening on Bitcoin's chart looks like drama, comedy, and thriller all smashed into one neat candlestick pattern. So picture this: Friday afternoon, the sun's shining, birds are chirping, and Bitcoin's flexing at $97,895, basically screaming, "Catch me if you can." Fast forward a single weekend pizza binge, and by 2 a.m. UTC Monday, we're down at $93,514. It's about a 4.5% slip. Now that's like ordering a deluxe pizza, opening the box, and finding 2 slices missing. It's annoying, but not exactly a tragedy, right? Unless, of course, you're leveraged long with no stop loss. But we'll get to that. Now, before I dive into every little wave and wiggle on the charts, here's a quick heads up, right? All the kind of messy behind the scenes scribbles that I'm showing today, trend lines, Elliott waves, the good, the bad, the wobbly, you can see those in our free crypto server, Discord server, I should say, right? So hit that link in the description down below after this video. The door's open and we hand out memes with the market updates. Okay, so back to the chart then, right? The shape that we're kind of staring at right now reminds me of 3-lined run of road sign pointing both left, right, all at once, right? Now, it can break either way, but if you kind of twist the lens just right, the odds of a short bounce north are juicier than my phone's autocorrect whenever I type hodl. Now, think of it like standing on a trampoline after someone else has just jumped off. You can feel that slight upward lift brewing under your feet. Zooming in on the 1-hour candles, we nailed the classic 1.618 extension at $93,684. That's textbook Wave 3 territory for Elliott fans. Now, if we, at least I am, if we do know about kind of wave 4 and what that means, right? They're basically the kind of timeout zones for overexcited wave 3s, retracing about 38% of that rump. So drum roll, right? The sweet spot was, of course, 94,365, and bang on cue, price tapped it like a polite knock on the door. Now, we could, of course, push towards the 50% mark at around $94,894. Sure, but there's kind of a traffic up there, right? Moving averages lurking like bouncers outside a nightclub. Higher the retrace, deeper the next drop. That's kind of Newton's law of crypto's gravity. So here's the line in the sand: $95,209.07. That's the level is kind of grandmother's antique vase, if you will. You knock it over and the whole 5-wave setup smashes. So wave 1 starts there, right? And wave 4 absolutely must not trespass it. So if candles kind of swagger past that line without touching a new low first, bearish structure dissolves and bulls grab the steering wheel. Now, let's address the elephant wearing a short seller's jacket, right? The opening drop didn't, quite punch through the 1.618 on the kind of micro leg. But if price shuffles down to $93,279, well, we light up a 5-wave reversal neon sign. Now that would kind of frame the earlier rally as one kind of, I guess, ginormous bull trap, right? And put us in a kind of textbook impulsive slide to the downside. A baby wave 2, a juicy, juiced up kind of wave 4, and a final plunge that'll rattle every loose screw out of the market. If, and it's a big if, that plays out, I'm hunting shorts with sniper precision, right? Entry somewhere after the wave 4 retest. Stop parked just above $95,274 because trespassers at Grandma's vase gets booted. And profit target is going to be around $93,085. That's a tidy 1.5 risk-reward ratio, the kind that lets you sleep at night without hugging the charts like a teddy bear. Now, the higher that we spike first, the fatter the reward zone. So I'm actually kind of rooting for a cheeky kind of head fake rally, if you will, just to kind of juice the trade a little bit. But remember, stop loss is kind of scared. If a candle even breathes above that wave 1 high, I'm out. There's no questions, there's no tears. Right. Pulling the lens back to the daily chart feels like switching from shaky phone footage to, well, IMAX. Now, April was a blockbuster, right? Bitcoin rocketed by 31.39% from $74,500 to $97,900. Practically undoing the 32% faceplant that we had taken earlier. Now, it's the financial equivalent of falling off a skateboard, getting up with a bruised ego, then sticking a perfect kickflip in front of the very same crowd. Now, momentum, right? Baby, it's kind of, not just infinite momentum, right? But gravity eventually does tap everyone on the shoulder. So is a dip towards 90 grand or even 85 ghastly? Honestly, no. Right, hitting the 50-day exponential moving average (EMA), which is waddling up in the kind of high 80s, would be as ordinary as rain in April. Right, it refreshes the soil, shakes out weak hands, and gives the stochastic RSI enough space to slingshot from oversold to overbought in the next run. So picture Mario grabbing a star and zipping past the Goombas. Now, speaking of indicators, accumulation distribution is climbing like my caffeine intake on a Monday. Wallets are, stuffing sats while headlines scream panic. Now, that's the same vibe that we get at outlet malls, right? Crowds stampeding out of the door while a few sharp shoppers quietly snap up deals. Now, in other words, the wall-to-wall accumulation plus a fast-correcting stochastic RSI equals a coiled spring potential. But let's not glaze over the tension. There's always tension, right? One misstep, maybe macro news, maybe an ETF rumor gone sour, and that delicate 5-wave balance snaps. Now remember, the $95,209 line. Break that before a new low and bears a toast. Hold under it and the bulls stay trapped in bear country. It's a kind of chess match where both players have a kind of laggy mouse. And here is where it gets spicy. Right, the RSI on the daily is still above 50, nowhere near the kind of nosebleed zone. The MACD histograms printing higher highs, even as price kind of jiggles lower. Now that's kind of like spotting your friend silently flexing in the gym mirror, right? They're not shouting, but the gains, they are there. Now those subtle divergences, they whisper bullish intent. Now when sentiment flips, the first thing that you're going to notice is the volume exploding like popcorn. Then candles burst past $105,798, shredding every last doubter on the road to new all-time highs. And if that happens, my mental GPS sets course for 130 to 135,000. Maybe it lands in Q4, maybe sooner, but the historical script loves autumn fireworks. Now, I would be lying if I had said the path is straightforward. We could dance sideways for weeks, fake out up, puke down, rinse and repeat. Markets are like toddlers, right? They'll do the kind of opposite of what you beg them to do, right? The trick is to know what tantrums are noise and which screams signal the next growth spurt. For me, the key tell will be how price behaves around that 50-day EMA. Tag it, hold it, bounce with conviction. The bull script is intact. Smash through it and close daily candles below $85,000. Well, then we can dust off deeper retracement targets and prep for bargain hunting at the low 80s. Now, either outcome is tradable. Neither is catastrophic, provided you manage risk like a responsible adult and not a thrill seeker trying to YOLO rent money. Okay, so let me ground this with a story. Last summer, I was at the beach fiddling with a metal detector, convinced I'd unearthed pirate gold, that's been buried. 10 minutes in, and all I'd found were bottle caps and a suspicious looking spoon. Now, just as I'm ready to kind of call it quits, the detector squeals, I dig, and out pops a kind of vintage coin worth a small fortune on eBay. Markets, they feel the same, mostly noise, just random junk, until that one rare signal surfaces. Now, today's chart has that kind of sequel potential, the kind of wave structures, the oscillator kind of resets, the stealth accumulation. They're the metal detector chirps. And will it be another bottle cap or an old coin? And we're going to know soon enough. In the meantime, there's the kind of practical playbook, I'm following, which is if price drifts up towards $94,900 without breaking $95,200, well, I'm aiming the short, and if instead we kind of slice below 93,300 first, I scrap the plan and watch for the impulsive fifth wave flush into the high 92s. Now, should candles kind of ignore all bearish hints and bulldoze past $95,200, then I step aside, I let volatility settle, and I scout for a fresh bullish setup. Flexibility is going to be everything. Markets don't care about my feelings. They don't care about much, to be honest with you. They certainly don't care about your feelings either. And hey, if all of this wave count lingo sounds like, algebra homework, remember the big picture: accumulation rising, momentum indicators resetting, macro thesis still targeting six-figure BTC, Corrections are intermissions. They're not closing credits. The difference between pros and panicked newbies is that pros bring popcorn to the intermission instead of sprinting for the exit. One more shameless but useful reminder that every chart screenshot, every trade idea, every occasional dad joke drop first in our free crypto Discord. Pop in via the link that's in the description down below, say hi, and let's dodge those kind of market potholes together. Plus, the memes alone are worth the ticket price of $0. All right, so the moment of truth knocking at the door, whichever way that this 5-wave skirmish resolves, it sets the tone for summer. A decisive break south flips the sentiment switch to fear, greed, index nightmare mode. A strong bounce catapults us towards all-time highs while skeptics scramble to chase. Either zone is kind of fertile ground for traders, but only if you respect risk and don't kind of marry a bias. Markets reward opened minds and punish stubborn hearts. So here's a quick recap while the kettle whistles. Friday, BTC kissed $97,895. By Monday, pre-dawn, we're flirting with $93,500. 1 hour chart shows a textbook's 1.618 wave 3 followed by a textbook wave 4 bounce capped under $95,209. Drop to kind of $93,279 ignites a full wave, a 5-wave kind of reversal, I guess. Break down, or should I say break above the $95,209 without that drop kind of hands the keys back to the bulls. Now on the daily time frame, the April's 31% rocket balances kind of marches 32% crater, if you will, Indicators reset, accumulation humming, eyes on 50-day exponential moving averages around 90 grand. Big kind of goalposts, $105,798, clear that, and the next stop is six-figure city. Long-term targets $130,000 to $135,000. So that's the map, that's the madness, and that is why my caffeine budget is higher than my grocery bill.